In today's video, I'm going to be showing you guys how to turn a confusing chart that looks like a jumbled mess into something a little more manageable, where in real time you're able to recognize patterns, recognize what's going on with the price action, and draw very accurate trend channels and trading ranges, especially in a confusing market like we had today where prices were very congested. They were in several different trading ranges. I'm going to show you guys how to stay on the right side of the market and to avoid taking major losses. So the first thing that we can do is rewind to the beginning of the trading day. And the first main rule that we have with trading ranges are that we want to sell at the highs and buy at the lows. And the rules with trading ranges are that most breakouts will fail. So we're seeing that we went from the highs to the lows and we're reaching the highs again. So we can start to potentially draw a wide trading range like this, thinking that, okay, we broke out the top and we're expecting to reach the lows, but at the same time, there is a conflicting pattern because we have this very strong uptrend, which also has its own rules. And the rules with trend channels are that once we have a break, we don't expect prices to start reversing until we have a new extreme. So in this case, we have a break of the uptrend, but we're still looking to test a new high. And where we want to enter is with a second entry long, which we have an opportunity right here. So this is known as a two-legged pullback. We have a new high. We have one leg down, a break, another leg down with a nice bullish signal bar at the EMA. So that looks like a very nice long setup to me. So it did work for about a 2-point scalp, and that's all we're going for, before we ended up trending a little more down, but then just had some congestion. So what do? We continue to draw our short-term trends to allow us to analyze what is going on with the price action. We have this downtrend, we have a break, we're still expecting a new low, and eventually we get one. So now we can also see that it looks like some congestion is forming within this overall range. The market just opened and we're getting some price movement, and now that we're getting more support here, it just validates this potential trading range that we have, and we get a higher low with a nice bullish signal bar closing above the EMA, all in one bar. It went down and trapped all the short sellers. And with this nice of a bar, you can be confident that we're potentially going to reach the top of the trading range. So we ended up working higher and higher. But now, once again, because we're reaching these highs, we don't want to continue to think to go long. We want to start shifting gears and look for short setups. So we see that with this short-term trend channel, we have a break and a new high and a nice bear signal bar. And we want to wait for a lower high. So once again, we tried to push down once, we had another breakout, but most breakouts of trading ranges will fail. So we're still looking to go short, and we have a nice lower high with a bear signal bar at the top of the trading range. It closed below the EMA. That looks like high probability setup, and prices ended up working down. So once again, we want to focus on our short-term downtrends and see if we can spot a second entry short. So we have a leg here, we have a break and a new low, but that also looks like a pretty strong leg. So if we draw another short-term trend, we see that we have one leg up, two legs up. So if we see a nice bearish signal bar at the EMA, we can potentially go short. But once again, we have to remember that we're at the bottom side of this trading range. We see that prices are really sort of congested at this area. So there's two conflicting patterns. We expect to reach a new low, but also we're expecting to trade back up into the top side of the trading range. So when we see this bear signal bar at the EMA with a conflicting, very strong leg up, we should be wary of it. I wouldn't blame you if you did take this short, but in real time, an experienced trader can expect that prices could potentially reverse. We're at the key support level where buyers are going to enter the market. So all the smart traders are waiting for a somewhat good-looking second entry short to appear, only to wait for a failure. And here is the second entry short failure, which would have actually been a nice trade to go long. A little bit aggressive because you're at the high of the move. I won't mark it for now, but just something to be aware of. When you have such a small bar like this, it's only about a point and a half worth of risk. it's actually better to not take them, because on a higher time frame, this bar will really just look like a mini doji because of how small it really is in comparison to the other bars. So that's another reason to avoid going short at this point. So now we end up having a strong move up, which just signals a lot of people did get trapped here. It does happen, but let's draw another short-term uptrend. So we have a break of it, we have a new high, we have a strong leg down, and now is where we finally reach a new low of this overall downtrend. But in reality, it also formed sort of a trend within itself because of how strong the move was. So let's see if we can still get any second entry short set up. We don't get one. We're still far away from the EMA. We have a break and a new low of this downtrend. So now officially everything is actually pointing in the direction of going up. We already had a clear break and a new low of this overall downtrend. We broke out of the bottom side of the trading range, which signals that we should start thinking to potentially reverse, because most breakouts of trading ranges will fail. So we're expecting to work our way back up. So let's see if we can get a failed second entry short. We have one leg up, first entry short, another strong leg up, a second entry short. So all the people who are still going short at this point are going to get trapped, because first of all, you don't want to take any entry that closes right at the EMA. Second of all, we already had a break and a new low of this short-term downtrend, and we have this short-term uptrend working. So everything is signaling that you should not go short, and that's why the next bar was a nice bullish reversal signal bar. That is a very, very high probability trade, and it worked out incredibly nice. So now we have another break and a new high of this short-term uptrend. We have some congestion starting to form, congestion. So immediately we want to draw our short-term trading range, also known as just plain out congestion. So you don't want to get chopped up here, but you still want to draw your short-term trend lines. So here we have a breakout at the bottom, and we have a micro break and a new low. Then we push back up into the top side, and we just have more and more congestion. So now, even if we extend this trading range to be something like that, we don't want to take any entry just yet, because there was even a break and a new high of this short-term trend, break, new high. And prices are very, very stacked. We reach the high of the trading range. We break out the top. Now, this is actually a trade you could argue for if you're more of an aggressive trader, simply because we have a visual 2 legs up, 1 leg, 2 legs. We have a nice bearish signal bar. Prices have been reacting to this area so much, and this just looks like a nice reversal pin bar to at least ride back down to the EMA. And that's why we ended up going to the bottom side of the trading range. So now let's draw another short-term trend right there. We have a lower high, but really we're going right into these lows, so we don't want to take that. And actually, it's really not even a lower high. It's technically counting from the low. We're looking to actually go to the top side of the trading range, so we don't want to go short. And that's why you would have got trapped. This is a higher low, but once again, you're going to the top side of this trading range. No real entry. You're just going up and down, up and down. There's no space. You want to wait for a failed breakout like we have here or up here. If you're thinking that this trade might have been a failed breakout, once again, you don't want to take any entry that closes right at the EMA, especially with this many bars stacked. And then we do get a lower high right here. So we get a lower high confirming this failed breakout. But in reality, you can't take this trade because look how much support is right in this area. It's really the midline of this trading range, but it's also a mini range within the range, within the overall range of the day. So it's just that those are all the reasons that we have all these bars stacked, because if you zoom out, we're not only in the middle of the entire day's price action, we're in the middle of this range. And then if you're really on a micro level and thinking how traders should be thinking, you're really just even in another mini range right here. It's just way too stacked. You can see that there is even a potential trend line like this working up. So you don't want to take this short. That's another place to get trapped, but experience will allow you to sit on your hands and prices do end up reaching the top side of the trading range. So now, let's draw our short-term trend once again. We have a break and a new high, and we're at the top side of the trading range. So we want to continue to think that we are potentially going to end the uptrend and start trading downward. So prices continue working higher, but once again, we're expecting to go short. So we want to see if we can get a failed second entry long setup. We have one right here. You can't take it because this is the downtrend working lower. We had a break and a new low. You would be going short at the very low of the move. There's also support right at these levels. I believe it would have worked out for 1 point scalp, but for those reasons, you want to avoid it. There's just support right there. Even if we draw our upward side of the trading range right there, there's really no place to go long or short. And prices do eventually break out. So now, let's draw our short-term trend once again. We have a strong push down, first entry long, second entry long, but we also have this leg that needs a new low. And once again, we already reached a new high of the day, so it's really just a failed breakout of the overall trading range, as well as we are getting right next to a news announcement. There's 12 minutes away, so you really don't even want to be trading at all, and that's why you would have got trapped right there if you went long, and there we have all the crazy bars. So the main thing to learn is at the top side of the trading range, overall context matters. You want to be thinking to go short, not long, especially you want to avoid trades when there's a big news announcement like the one we had today. You just have to sit on your hands. It's too volatile to trade anything. We eventually just push down. And once again, we're expecting to reach the lows of the day because of the trading range structure. So we have this leg down. We have a micro break and a new low. So we have a first entry short, second entry short right there, but we already had a break and a new low. It's pretty volatile. It worked out, but it's a risky trade. We just have some congestion, but prices are looking very, very bearish. And now we actually have a failed breakout with a nice bearish signal bar, but it is way too high of a risk. It's a very big bar. Prices are just way too stacked. It would have worked out, but once again, it's just better to not take those risks. And we're just getting towards the end of the day. There was just very, very, very quick price action, but not too many great high probability setups. That's going to end the video. Hope you guys enjoyed. Hope you guys learned some things. Let me know what you think in the comments. Have a good one, and peace out.